down the hammer and pick up the pencil. You're about to listen to the Savvy Radio Show. Learn from real-life real estate investors, experience revealed with the Savvy Landlord as your host.
You are in a super duper treat. Yes, you are. You tuned into the Savvy Radio Show. And one of my one of my favorite people on my team as a real estate investor. You got to have a team. You got to have an accountant. You got to have a CPA. You got to have a person that's passionate about entrepreneur. You got to have detail people. You got to have all walks of life. And Rose Taylor is that person that's on my team. She is my go-to person. When folks ask me questions, I basically forward the emails to you, Rose.
Yeah.
Sometimes I take my friend's name off there. And that's why we're having this episode today, because 3 questions that continue to arise. And one is converting your residence, your primary, into a rental, and the benefits and this loopholes and the things that you got to look out for. And then section 179 was a good friend of mine, Sean McVicker, buying a vehicle. And I was so glad that I brought that up in our accounting meeting last couple of weeks ago. And then Obamacare, how do people not get stung, and what's kind of, just some broad strokes of life of healthcare for people that don't have it, need to have it, and so on. So let's just dive right in. Well, so hello.
Hello.
How are you?
Good.
Why do you like numbers?
I never thought I was a number person, really.
I know you're an entrepreneur.
Yeah.
Like I try to explain stuff to people. I'm like, this gal's got her hand in a lot of stuff, and I'm amazed that you can perform at the level that you perform. Have you always been entrepreneur, like from your parents and
from my parents, my grandparents, and even to this day, I think at Christmas when I was over at my dad's house, he was laughing that I was still doing accounting.
Well, and why do you? I mean, is this like your safety net?
It's just something that I kind of fell into, and then I was good at it, and so it just stuck with me. And people always need accounting; they always need taxes. So,
it's an ideal position.
It's just that he thinks it's funny because I didn't particularly enjoy it when I was like in college. So,
when we first met, you were super entrepreneur, and you had multiple clients. And every time I see any business or do any transaction, I always think how they're making money, where they're making money. And when my old accounting company had like hundreds of people, I was like, wow, he's killing it. And then you left, which was, I understand Scarlett was on her way. You didn't have insurance. And then just keeping up with other entrepreneurs, being an entrepreneur, you had a little fear there. You had a fear that, is this going to sustain? Am I going to make the money? And what happened there? You just left.
I think
on your own.
Yeah. Well, I think that's one thing that's always kept me with accounting is seeing different businesses and interacting with multiple different entrepreneurs.
Yeah, you get to see my financials.
Well, that, and I also get to learn about different businesses, stuff I've never even heard of, and how they make money on that. And that to me is fascinating as an entrepreneur.
Yeah. When you're looking at numbers, do you see people's personality in their numbers? Like they have, like there's a hamburger company and another hamburger company, and one hamburger company's killing it and the other one's not.
Yeah.
Is it result of their training or their personality? I mean, I hear a lot of people buy new cars all the time.
Yeah.
And then there's people like me that don't spend $1 unless it makes money.
That's funny that you said that, because I put that on my notes as, the different type of, under the 179, it goes back to what type of person are you? Are you the kind of person that likes the big fancy cars and drives minimal miles, or are you frugal? And
cool. So you have to know that.
Well, and those are the things that I have to know too, because depending on what that answer is, it's going to determine what's going to be most beneficial for you for tax purposes.
Awesome. And that's why you're here. So let's just get into section 179. So this is how this all happened. I had a great friend of mine, Sean McVicker, sends me an email, says, hey, can I write off my car for something. And I was like, what the freak? I have no idea. I know that you can purchase a car in your company and use it as a vehicle, but the government is all over this. They watch this like a hawk. I know this, for example, because a lot of people abuse this taxation.
Yeah.
They buy a car out of their company and give it to their wife, and she has nothing to do with the company.
Right.
So I've always diverted that. I mean, probably from your advice 10 years ago, don't do that. It's going to get definitely red flagged. But then it's been coming up a lot, in a lot of
Yeah.
my circles. And so break down the section 179. What does that mean? What's the advantage and who falls in that?
Well, I mean, there's different sections of 179, but we're talking specifically about the vehicle
Right.
section. And for a long time, this one was called like the Hummer loophole.
Interesting. The Hummer.
Yeah, because
Depends on
it was
What kind of Hummer we're talking about?
a large vehicle,
A certain
probably weighed over 6,000 pounds. So it essentially allowed a lot of business owners to deduct the full price of their vehicle in one tax year.
So whenever they purchase it, or can they extend it to the second year? Or
Whenever they purchase it.
so it has to be that year.
Well, it doesn't have to be. A lot of times the section 179 works with bonus depreciation too. So, essentially you could deduct the full price of your vehicle in 1 year. And that goes regardless of if you paid cash or financed it too.
Wow. So what's the advantage? And the stipulations are you have to use 50% of that vehicle for.
It has to be 50% business use, at least 50% business use.
And how do you quantify that? I just say, hey, well, obviously I look at houses all day.
Yeah. So the majority of your time is spent
in the vehicle.
Yeah.
But you can't write off any mileage.
No.
Or any other expenses due to that vehicle.
You could write off your fuel, insurance.
You can through the company?
Mm-hmm. If you're not doing mileage reimbursement.
So it's almost like buying or leasing a vehicle.
Yeah.
So the company actually owns that vehicle?
Yeah, it should be titled in the company's name.
Okay, so that's one trick. So make sure you title it in that name.
Mm-hmm.
Okay.
Yeah, and
do a lot of people do the 179?
I would say it's fairly.
But in my case, I don't. I have my vehicle in my name, so I can have the 55 cents, or what is it at now?
50. Let's see. For 2018, it's 54.5.
So 54.5 cents I can write off at 8,000. Let's just say I drive 10,000 miles. That's $8,000 a year. Yeah,
the company can reimburse you for that.
Oh, the company can.
Yeah.
So that would be like a deduction on my personal taxes. For mileage occurred.
It would be a deduction from the company
that paid me.
That paid you. Mm-hmm.
Okay.
Yeah, and it depends on how your entity is set up. So
S corp or C corp,
S corp, C corp, or
sole
proprietor. All those depend. All that depends on how you're doing your vehicle. The other thing you want to keep in mind is when you write off a vehicle like that on your taxes, you have to recoup that depreciation. And as we all know, the vehicles don't appreciate. So if you sell it or, get a new one, then you have to recapture that depreciation.
Of the loss?
Yeah. Well,
so if you sold it, is there a timetable?
Well, normally we do it over 5 years, but if for 179, let's say hypothetically that we took that all in that 1 year. Let's say it was $40,000.
Yeah, let's get an example.
And we took that all as an expense in 1 year.
So I took $40,000 off my bottom line for a vehicle on the section code 179.
Yes.
Mm-hmm. So then what happens when I sell it 5 years later?
Well, then that car, let's say you sell it for $5,000.
Okay.
Then you have to recapture that.
$35,000?
Yes. Mm-hmm. Now, a lot of times what happens is you get another car. So it's constantly rolling it over.
So, okay. So the two things are you have to buy a new car or never sell it.
And the key word is new to you.
So it can be a used car?
Yes.
Okay. So why hasn't my accounting company told me about this law when I bought my truck 4 or 5 years ago? You suck.
I suck. I'm sorry. No, I mean, a lot of times, because like we were saying earlier, it just depends. In order to take the 179 deduction, you have to have a taxable net profit.
The income. So if you're trying to, back in the day, 10 years ago, when I was making $12,000 a year,
right,
doing earned income tax credit, this would not work.
We're not going to take. Yeah.
So
we're
I
not
have to make at least $40,000 more if I want to write off that.
Yes.
What if I made $20,000? Can I take $20,000 that year? So this can go against my total profit.
Well,
for
then
that year.
then that goes back to bonus depreciation.
All right, what is bonus depreciation?
Bonus depreciation is just another code section that allows you to depreciate certain amounts on equipment, software, vehicles, and I believe for 2018 on vehicles they're allowing 100%. So I wrote some notes here.
So basically that's a new thing. The bonus appreciation.
No, it's not new.
The 100%?
It's just the amounts change every year. Like last year it was 50%, and under Trump's Tax Cuts and Jobs Act, it was moved to 100%. But you have to have bought it after September 28th. So that's just the way they write all the tax code. It's complicated, and
it's confusing.
This happens if you do this, and
Yeah. Well, so I guess would be a loophole to pay an educated person like you, because that's what you do all day is read about this code, trying to figure it out at the right time.
I do, yeah.
Because I learned from you that you need to hold on to property in Oklahoma for 5 years, so then you won't get state tax on that transaction, and that could boil down to 1 month.
Yeah. And so, just like we talked about last time I was here was, that's why it's good to have an accountant that you work with regularly, because if you want to buy a car, you're thinking about buying a car.
And that's me. That's why you're here.
And then, okay, well, let's talk about it,
Let's do it. So should I wait? Like I think my truck, I bought it in 2015. Right. So I'm at almost 4 years. I have like 1 more year left on my payment.
Yeah.
Now I could go buy a new truck in 19, and I could probably write all that off. And then what would the absorption rate be on the actual debt that I have on that vehicle that's in my name now? So I have a vehicle right now that's in my name that I have 1 more year payments left.
Yes.
And I rolled that over, but now I'm upside down the remainder of $5,000.
Right, but you traded it in?
I traded it in.
Okay, so that gets added to the basis of your new vehicle.
Whatever that amount, so whatever it's on that ticket that says, and that's the amount that I have potentially could write off. And if I know in 2019 I'm going to make a ton of money, I could go against that.
That's a good strategy too. So,
and I've seen people buy a car in December.
Yeah, because they know that they need that additional tax benefit.
Right, because you don't want to pay tax on something that and at that time you may not even have that money.
Right,
and you can finance it though.
Yeah.
So I can go get a loan in the company's name. I'd have to be pretty savvy with the finance department.
Yeah, and I think there's other issues like with insurance. Your insurance carriers, they might try to charge you more because it's a
but company. You can get it insured in your name. Yeah, and have it titled in
the company name.
Yeah, because you can slide on it. Yeah,
and then the other thing we'll have to think about is if this is your only vehicle.
No, well, in my case.
So then sometimes we have what we call a personal use of company vehicle that we add back on your personal tax return.
For the mileages.
For the mileage that you use for your personal car.
Okay. So that's where it gets tricky with the government, and they kind of watch that ball.
Yeah, and because that portion is subject to self-employment tax. So
does the government, so right now the government doesn't know that I have vehicles. I mean, they know because they watch my social security number, and my social security number has an installment loan from Ford F-150 loan or whatever.
Yeah.
And they know that I have a Kia minivan that I'm financing. So do you have to really document that? Because we do have a house van, and when I come home, I don't usually drive my truck because I'm with my children.
I mean, I really think that comes down more to when you're in an audit situation. You just want to have a
losing battle quickly.
But document.
And a lot of investors don't do that, so it's sad. Okay, anything else that we need to know about the Section 179? So
I mean, there's a lot to it.
So okay, more you got to say?
No, I'm just saying, it's we're kind of skimming over the surface.
Sure. So who would this be? Is your phone Thunder colors? Not
on purpose. Okay. I mean, I love the Thunder. Okay. I support Oklahoma City.
Rabbit trail. I just saw your phone. Okay. All right. So who would benefit from this? Obviously, a real estate investor, because at least 50% of their time is in the vehicle.
Yeah, and if you're set up as an S corp, you can do it. Also, if you're a sole proprietor as well. But generally, for that, we do mileage too. And if you're
in my case, it just makes sense because I can write off a bigger deduction.
Yes, but that's if you're going for the heavier vehicles, over 6,000 pounds. That are more expensive. If you're going to do, well, yeah, even like, an F-250 or whatever. But if you're more on the frugal side, if you want to do like, I don't know, a Honda Civic used or something, you're going to get.
Can you still use that Section 179?
Yes, because it's as long as it's new to you. With the bonus depreciation, it has to be new.
Okay.
But for something like a vehicle like that, that might be, you might get more value doing the mileage, just because there's not a large amount of money that's going to reduce your taxable income.
Because it's for $8,000. In my case, 10,000 miles, 55 cents, whatever.
54 and a half.
So that would be almost, that'd be $5,000, $6,000. So $6,000 off versus a free vehicle. And you can, but you have to, the key is that you have to run it through your company and you got to make sure you're profitable.
Right.
Because if you're just starting out as a real estate investor,
Yeah.
you're taking a lot of deductions, you have a lot of repairs.
Yeah.
And you're not really, you don't want to make money. So it's just, it's a certain timetable, a time frame in your real estate career.
And if you're anticipating that 2020, you're going to be much more profitable, maybe put off getting the vehicle until then.
Yeah, well, I thought about going to 2020, but what I'm going to do is meet with my accounting team in June. I'm like, guys, should I wait 6 months? Am I making too much? Because I really am not doing any flips. I'm really not doing any kind of deductions. I'm just kind of doing the Savvy Radio show.
Right.
So, which I'm not making any money.
Yeah, but
Okay, cool. All right.
So talk with your accountant.
And that could be you. All right. Let's go into, this is the big raging question to me. And you said sole proprietor here in a minute. So so I got a friend who is a single guy. He makes $70,000 a year. No dependents, no deductions. The guy's paying 30%, 40% in taxes. So he's throwing away $30,000 a year to taxes. And I was like, dummy, you got to change that real fast. Convert your house into a rental. Now you can get depreciation and now you can write off your interest, because you can't do that as an owner. Since under the Donald Trump thing, you can't write off your own prime residence.
Well, you can. It's just it's not going to be any benefit to him.
Well, you can on your rentals.
On your personal property too, but you have to itemize.
Okay, like section like land versus the property itemize?
No, like itemize, you know how they give you your standard deduction?
Right.
So your deductions have to be greater than what the IRS allows. So by itemizing, like
clarifying, I guess.
Like your property taxes, your personal property taxes, your mortgage interest, your charitable donations, if all of those amount to greater than the standard deduction, then technically you're itemizing and therefore writing off those deductions.
All right. Well, of course that
it's for another podcast.
Yeah, this is cool in my head. So how could I help my homeboy save $30,000 and have a rental? Because you asked me some questions off the radio that were very interesting. You're like, well, is he going to buy a new property? Is he going to move somewhere? Does that matter? And my understanding, because I've done this twice now in my lifetime, where I've taken my residence, turned it into a rental, and I can't remember. That's why I had you back on. Is there a timetable? You have to wait 12 months of a seasoning. How does that work? Like, I move out tonight. It's this December 30th. Can I capture all that depreciation, or does that has to roll into 2019? Is there a timetable?
Well,
tell me the process there.
So when I start to talk to clients about, they bring up, well, I'm thinking about renting out my personal residence. I usually talk first about what's their goals for the next 2 or 3 years. Because, we want to make sure that they don't have any plans on moving back to that residence.
Okay.
I mean, if they do, that's fine. But what I'm trying to get
then
at,
you have to reverse those deductions.
Well, when you sell your primary residence, you qualify for that home sale exclusion. And
what's that?
If you've lived in that property for the past at
2
least
years,
2 or out of 5 years, you can exclude up your gains up to $250,000 or
tax free,
or $500 if you're married or filing joint. So I want to make sure that we're
not losing that.
Not losing that.
So if I convert that rental over and it passes that 2 years, I don't get that.
Exactly. And
so you lose the equity in there. So this play for this guy, his property is not doesn't have any equity in it at this time.
Okay. Yeah.
So it's a great play for him.
Yeah.
But for someone that has a bunch of equity in it,
or someone that's like, I ran into this at some point. They moved out of their house and then they moved back in with like less than 2 years.
Okay.
So it was kind of an in and out thing, but they didn't meet that threshold for having lived in it for 2 years out of the 5 years.
Consistently.
Yeah. Not consistently, but just 2 years total.
Okay. So 24 months.
Yeah. 24
So out of
months.
5 years, you got to live in the property for 24 months
Yeah.
to sustain to get in the tax free.
If they go to sell it. Yeah.
But if you hold on to it for the long haul, you will pay tax on that appreciation. I mean, on the profit whenever you sell it, if you do sell it.
If it's over the 500,000 gain.
Or does it stay in place, that profit that you have?
Right.
Oh, so if I hold on to it for 10 years, it won't matter?
Right. I mean, for you as your personal residence?
Yeah, like I lived in it for
Yes.
2 years. I moved out. I converted that house into a rental.
Yeah.
8 years later, I sell it. I can get my money back out tax free. The forced appreciation or the equity that was in there.
Well, they look at the 5 years, the past 5 years.
5 years from purchase
From
or the sale.
the look back period. So from the rental time.
Okay, I lived in it for 2 years. I rented it out for 6 years. I owned the property for a total of 8 years.
Okay.
So that 6 year window wouldn't qualify because it's in a 5 year.
Right.
So then I would have to pay capital gains on that
If you
profit.
chose to sell it.
Okay.
So first I like to establish that of, what's their,
What's their goal?
yeah.
Now you could pull out a line of credit or home equity loan or refinance and then sell it to get your equity out and then sell it.
But then you just have that.
Transaction that's in between there. So you not to get your profit unless you hold on to it forever.
Right.
That's the only way you can get tax free. If you refinance it, pull out equity, keep it a rental for 20 years, and then you wouldn't pay you don't pay tax on borrowed money when you refi.
Right. We're just going off of the basis in the sale price.
All right. So this is a good move for him per se.
Okay.
Did I advise him properly? Because
Yeah.
he's a single guy.
I mean, because basically it's like you're telling him like, why not?
Well, yeah. I mean, if he buys another property, he never intended to go back onto that property.
Okay.
Because he knows for sure that he just doesn't want the property anymore, and he's kind of upside down on it, and so he can't really sell it.
Okay.
And so it's a 3-bedroom one. It's a single guy, and so he wants to build real estate portfolio. I mean, this is perfect time. You convert this into a real estate portfolio. Now you're considered a business owner. Now you can take deductions like your cell phone because you have to manage that property. So that's a write-off. Now that's pre-tax dollars. That saves you money right there.
Yeah.
He's like, well, do I have to create an LLC? No, not necessarily. You can be a sole prop. Am I correct on that?
You're right.
Okay. And so he can take all the deductions. Now he can write off his interest. Now he can start creating depreciation.
Yeah.
Off the bottom line. That goes right against his W-2. And if he moved into another property with a homeboy, or he can go buy another property, it's the same thing.
Yeah.
Now, you can own rental, correct, without owning a residence?
Yeah.
Sure. And you can get all those deductions.
Yeah.
Okay.
So,
And what else am I missing on?
well, we have to establish the basis
points of
from
actual
personal to a rental.
Okay, what does that mean?
So the way that's figured is your purchase price,
The original purchase.
your
price.
original purchase price plus any major improvements. So like your day-to-day home repairs, they don't count. But if you've done something major like add square footage or I don't know, a big remodel or something like that over the years, then you could add those to your basis
points. So create more value to create more depreciation.
Yeah. We also need to look at what the comparable value, the market value is at the date that you're going to convert it.
Okay.
And then we take the lower of those two.
Well, I think he overpaid.
Okay.
So
then technically he needs to take the lower of either the market value or what he has in the property.
okay. Meaning, so it's probably the market value at
Yeah.
that time. Because it was what happened at that time. It was just the market was so hot.
Yeah.
He bought in and it just tanked at the
Okay.
wrong time. And he was misled at the time.
Yeah.
That's why he's hooking up with homeboy. It's like, what? What else does he need to know? I mean, obviously, I strongly recommended him to utilize your guys' service But if you went to another accountant or bookkeeper, I mean, he's a single guy. He doesn't really need a CPA at this point in time. He can do all this online.
Yeah.
Should he get what advice would you give that person? Should he have him come to you just to kind of get it lined out before he files his taxes? And he hasn't rented it out yet, so he can't do anything until 2019.
Right. Okay. Well, I would say just keep good records.
Of what's happening.
Renting
it out,
of his expenses. Yeah.
Now, he can depreciate. I mean, he could deduct the painting now.
Yeah.
Because he has to get it rent ready. Mm-hmm. Okay, so he can write those off on his taxes.
Yeah.
So he definitely needs to convert this as soon as possible.
Yeah. If he has if he pays, I don't know, landscapers or everything that goes into your house basically becomes a deduction.
Got it. And then he rents it out. What else? You got notes?
Let me look at my notes
I
here.
know. I'm like, I just gave you 3 questions, by text. Like you come back with a pad and a paper clip.
A paper clip.
And several pages of notes. My notes are like 3 lines.
Oh, look, this is Scarlett.
Section 179.
Scarlet scribbles.
I wonder what she's going to be like. She's like Fashion Bug. She loves to pose.
She is such a girly girl.
I have one of those. She's not going to be an accountant. It lightens the room.
No, I don't have anything else.
Okay, so if you have a question, this is just an interesting topic. I've known about it. I've done it myself. I advise this individual to do it. That's why I wanted to verify all that jazz. Okay. Also,
one thing to note is, I just thought of this. The second home, if you have a second home, that exclusion does not apply to a second home.
Exclusion? What do you mean?
When you sell that, how that we talked about the primary gain or the sale of a primary residence exclusion, that doesn't apply to second homes. So if you have a vacation home or a lake house or whatever,
you can't do the hustle.
Yeah.
Convert that over. You can
convert it to rental, but
you can't get the benefits of it. I get it. That's another way for them to stop you because you could just get 2 of these things going. Mm-hmm. But you do want a second home because you can get a bunch of good loans and you can get a bunch of advantages buying a second home, but you're trying to automatically convert it over to. And that's why when I did the other home, I got a loan in my name as as a second home. But I I tried to. Eventually, I had to do it to a portfolio loan into a business loan. But I can see why that's an advantage. All right. Speaking of rentals anyway, what if you mentioned this in our meeting a couple of weeks ago? You mentioned the word contract for deed, and you have to, when you sell a property for contract for deed in the state of Oklahoma, you mentioned you'd have to capture the gains as you sold it, but it's not considered an installment loan. Because a typical installment loan, you're paying taxes on the profit that you make on that monthly payment.
Right. Mm-hmm.
But when you sell a home on a contract for deed, you're capturing all that profit on the amount on that paperwork that you're selling it.
Right. Not if you have an amount that in your contract that's for rent, and then sometimes there's a portion that's
right. Dedicated to. Let me give you an example. So I purchased a property for $25,000. Mm-hmm. I put $5,000 in it. Let's just say it was paint, and I wrote that off on my taxes. So I can either make that a $30,000 basis points, but then I can get depreciation on it. But I couldn't write off that $5,000. So I'll just leave it at 25,000 basis points. That's on my HUD. I market the property because I'm as a rental. I decide to sell it on a contract for deed. I sell the property for $50,000, right? Mm-hmm. Now, that tax position just accelerated right then. Now I have to pay tax on that $25,000 capital gain, right?
But you're not collecting that money.
Not yet.
Right.
Over time.
Yes, over time.
But I'm dinged somewhere.
When you get that at the final, whichever happens.
Which is normal.
Right.
Okay, cool. So I was getting a little nervous. I actually got a little sweaty palms in that meeting, and I didn't want to because we already had a 3-hour meeting.
Yeah.
And you brought that up. I was like, yeah, that's a contract for deed. You're
right.
Like, whoa, VanCauwenbergh. And then you realize that you have to capture these gains somewhere in there. And I just blew you off, and I was like, yeah, whatever. I just won't tell my accountant anymore what I'm doing.
That's a bad idea.
I just won't tell her that one is a rent to own. But it makes sense. But eventually, when it does go into full whole,
Yes.
When that contract is exercised, when they show up with the 50,000, then you have to pay capital gains on that 50,000.
Yeah, and that's one thing that I think is so interesting about, working with real estate investors is all these different ways that deals happen.
Yeah.
And then I figure out the tax
benefits or
ramifications.
Well, like we're like, here's two things that I'm just going to confess I'm frustrated with, and it's not necessarily you because I'm uneducated. One, I sold a business.
Oh, yeah.
And that year, I almost brought a knife to the meeting and started stabbing you, and you're going to pay tax. But I was like, I sold this business for a profit. Let's just say it was $400,000, and they gave me $50,000 down, and I'm carrying back $350,000. And you're like, Steven, you're going to have to pay tax on that total $400,000. I was like, Rose, that's impossible. It's an installment loan. Why would I? But that's just the tax code. I'd have to pay tax on the acquisition. But what if the guy deadbeats? I'm going to pay tax on that $400,000.
It was something to do with the equipment.
Right, whatever.
Okay.
But the point is, the dude disappears. So I sell the company to him for $400,000. He disappears, and I've already prepaid tax. You're like, yes, you had to pay tax on that. That's a big risk when you're taking an installment.
Yeah.
But that was on equipment probably, and I paid. And we figured it out, but there was a way we had to.
We had to change the contract to show that
to goodwill.
Yes, the goodwill
versus a tangible asset in the company. And so because I've already pre-depreciated this stuff, and I'd have to capture that as capital.
Right.
Yeah, I learned a little bit. I do pay attention somewhere, not when I want to.
I mean, I think that's
great. That was one.
So did you talk to me before that happened, or because I felt like it just happened?
No, this is like 2 years ago.
It was more than that.
No, I don't know. It's weird. I think it's 2 years ago. It was April is when I sold it. It was like around Mother's Day.
Yeah.
2 years ago, because we filed my taxes for the DJ company 2 years without filing taxes. Because I was just looking at a P&L the other day with it had to be 06.
Okay.
Somewhere around 06. No more than 07.
Okay.
Yeah, it had to be 06. Another one is giving away money. I learned the other day you can't give away more than 60% of what
50%.
But someone emailed me, and I don't know who this person is, and I emailed them back real fast. But this is what this individual said to me, and I thought they heard my cry on the podcast, and I'm glad that I have one female listener out there because it feels like it's always men that text me, "You suck." But this gal emailed me, went to my webpage and emailed me. I heard that you gave away the $100,000, and I was like, yeah. She's like, what if you asked the church to give back a refund and then turn around and give it back to them in January?
What if? I mean,
is that like, I'm not asking you for your approval because you're not like, I don't want to get you in trouble. But I mean, think about it. I'm paying tax. I wonder if I could, maybe I should make a few phone calls and say, hey guys.
I need that check dated December 31st.
Right. If that's possible, today's the freaking 28th of the month. I'm throwing away money that I would donate.
And you're going to carry it over.
I know. I got equity. I know. I wish I would have known. Just like, those are the three things right there. One, when I sold that business, I kind of got frustrated because I had to pay an extra $20,000 in tax. Then which I'm like anti, tax. Not that I want to pay the piper. Then I sold that property. I was 1 month short. You're like, Steven, why didn't you wait 1 more month to sell that property? Rose? Ass whooping, girl, because I didn't know. And then now I didn't know about this section 179. And then when I'm like thinking I'm doing a good thing by giving the church money, I'm like, you're shaking your head at me like, hey.
Well,
you can only give away 60% of. I thought you can give away, and I know that for Goodwill, not Goodwill, like Goodwill the store, you can get the maximum is 500
without filing additional forms.
Okay.
Yeah.
Oh, I can file additional forms.
See, I can file additional forms.
I seriously donate crap all the time. Not only that I get it from, just my kids are growing, and like I have a bag. I should give them to you. I didn't even think about this. I just don't. I have a bag of shoes. My 4-year-old is growing all of a sudden. Scarlett probably could have rocked these.
Yeah,
they're like flashy ones and like little Adidas. I was like, damn, at least like $20 shoes.
Well, add our list on to the list of 2019 goals is to meet with
quarterly.
Yes.
Oh, I already know.
I know.
I mean,
and
I know.
that's
And that's just in
that's
general.
our bad. Me and you.
Just like, isn't it sad that I had to force that investor to stay? So Rose didn't know this, but I had an investor hang out, and he started right before you came in, started asking me accounting questions. And I don't have my. I'm like, well, Rose is on her way up here. Ask her. Why are we so scared to talk to? I think we're afraid that we're going to pay more money in taxes or more money in fees. Listen, ladies and gentlemen, my word for the year is ask. I asked my friend to build that for me today. I ask you all the time. I have a whole file just for you of Rose questions.
It doesn't hurt to ask.
Yes.
But I mean, I also think that people, I don't know what it is. I think accountants have a little bit of a stigma.
Oh, yeah.
Like.
That you're a nerd?
Well, no, not even
nerd.
that, but
You
like.
get like a tattoo.
They don't.
You.
They're an afterthought. Accounting and taxes are an afterthought.
I guess as an entrepreneur, I don't want you to tell me no. Can I go buy this car? No.
If you want to hear no, ask your accountant.
Right. That's the thing. I remember that there were some times, that's what I love about you, and that's why you're sitting here, is like I asked you a few questions and you said no, and you went back and said, I was wrong. And I can't remember what that was.
Oh, yeah. That was on your marathon.
Yeah. And I was like beating you up. I'm like, damn, So,
no, but I think that's what makes me different as an accountant. Like,
yeah, you're human, and you're an entrepreneur.
I am
that's
human.
a great thing.
I am an entrepreneur, but
I love your quote. What is it? Don't buy anything unless you can expense it.
Yeah,
it's going in my book, girl. I am. I have a book coming out in April.
I need to take my own advice.
Yeah, you will. All right, so we're 36 minutes. We got about 5 more minutes left because
Okay.
I know you got a meeting. Obamacare. I got stung again this year and I actually had a conversation with an investor the other day. The same dead exact thing happened.
Yeah.
You have to, in January or December, I have to tell the government, the marketplace, aka Obamacare, I'm going to make $70,000 this year, and you got a different. It goes up to $77,000. So my wife last year said, "Hey, Stephen, how much we're going to make?" I'm like, $77,000. So we don't have to pay that much in premiums for our insurance.
Right.
And obviously, I just got stung by giving away $100,000 because I can't claim more than 60% of that 100, because if I make 100, you see what I'm saying? So I'm over the limit of my profitability that I've taken home because that flows through me because I'm an S corp.
Right.
So just me giving away that money to the church punked me in Obamacare. It threw me over the edge because I'm over the bracket of 77,000.
Obamacare goes off your adjusted gross income.
Okay. Well, I don't know what that means, but yeah. How much? Millions of dollars flow through my hands. How could that be a gross?
So the donations part comes after that number.
Okay.
So we're not
talking about that. Okay, so I'm wrong.
We're not We're not worried about that.
Okay.
So it just.
But let's just say I made $100,000 this year. I was
Yeah.
supposed to make 77.
So when
a house I sold.
When you filled out your application, you said I was going to make 77,000.
Right.
And you ended up making 100.
Yes.
Say.
And that is happening all over the world.
Yes, it happened to me too,
Oh,
personally.
okay.
Like just I made more than what
You anticipated.
I anticipated. Yeah.
Because that was the cool Real Deal Hustle shirts.
Yes, it's those.
Yes,
I'm quitting my day job.
Pay here, no stay, no pay.
Yeah.
no pay, no stay. T-shirts. If you don't know that, we have a T-shirt company together. This is my secret weapon, girl. RealDealHustle.com. We have the coolest shirts ever, and I'm way behind, about 4 shirts of posting them. But it helps us. We make a few dollars, like in the tune of 6 or so. You can help us pay for Scarlett's college. I remember asking Rose, I have a goal this year for 2019. I want to make $1,000 in T-shirts. And you're like, a month? I was like, wow, you're really optimistic, girl. No, I meant like $100 a month. Anyway, so that RealDealHustle.com T-shirts has thrown me over the edge. I've made $100 over my $77,000.
Woo!
What do I do? How can I make this happen? Is this
then,
just stuck like Chuck?
So then the Obamacare is going to have you pay back those premiums on your tax return.
The whole amount.
Well, not the whole amount. It's just it's a large formula, basically.
All right, trying to break it down.
But that's what happened to you last year.
It's happened to me again.
And it's Well, yeah, when we file
We're
your
still figuring it out.
yeah, we're still figuring it out.
We need to figure that out.
But
So what could people do to, I mean, is this Obamacare? I know you're not a medical insurance expert, and I don't expect you to know every answer that I'm about to throw at you, but is there a way, is 2019 going to be just like this? Is Donald Trump going to, is he changing, reforming this? Well, do you know, have you seen any tax code changing? What's up with that?
Well, I know that, the penalty is going away in 2019.
Meaning if you don't have insurance,
yeah,
which I opted out, and I'm pay as I go now.
Okay.
For so far.
Yeah.
So should I let my accountant know that? I'm letting you know.
We're still going to deduct your premiums, because that's one of the beautiful things about being self-employed is that your health insurance premiums are deductible. And if your accountant is missing that, that's one
Fire
reason.
them.
That's one reason to have a second set of eyes.
Always. And I do, even though when you guys do my taxes, I have someone else look at them. Just
Yeah.
because.
Well, and we're human.
Yeah.
And especially if you're working with a smaller firm or just one individual, there's not another person to look over their work. So.
And that's why I like Fleming. You guys do have more than one person hanging out there.
And we all look at everybody's work.
And you're cheering them on. Make more money. Make more money.
You missed this deduction.
I love it when I sent a friend to you and you saved him $3,500. I can't remember. I don't want to say his name on the radio, but I thought that was really cool. There were some deductions that he misfiled. You guys filed an extension for him, got that money back.
Yeah,
pretty cool. So Obamacare.
Okay,
what else? So we're not getting penalized this year.
We're not getting penalized. I don't know what's going to happen with Obamacare. I just see in the in the news that the budgets or funding's being cut. I don't know if it's going to be offered in 2020. I mean, I just don't know as far as people getting their insurance.
So, I mean, what would be a good tip? Should I have, because $77,000 is the maximum for getting the best return on the Obamacare, right? Do you have that idea? Or should I just say I'm going to make $100,000 this year and go from there?
I wrote down that it was 98 was the max, but that was for a family of 4.
Okay, cool. So I'm a family of 5.
Okay,
so maybe I won't get stung. Maybe I won't get stung. I just knew that when we called you in October, because we were planning on going to the market. And you told
getting
me
your income.
And you were like, how much can we? And you were like, you've made this much money. I think the bottom fell out in our world because our premium is $1,800 a month.
Yeah.
As a family of 5 times 12, because last year I had to pay $12,000.
And are you getting any? Are you paying the amount in full?
No, we're not paying anything.
Okay, you're taking all of that
credit.
Yeah. Okay, see, okay, well,
we gotta take it all, girl.
Okay,
but we have the highest catastrophe.
Right.
The worst one that was offered. Because we paid every time we went in there.
Right. Okay.
I mean, like my son, we just got crutches the other day and we paid all that deal.
So this year in 2019, when we file your 2018 taxes, we're going to take what you paid last year off as a deduction.
Okay. Just my actual purchases?
No, what you had to pay back when we filed your taxes.
Oh, the $12,000.
We're going to put that as a deduction this year.
Okay, cool.
Because you can't, because you're self-employed.
And you can forward that every year?
Every year.
Oh, okay.
Yeah, as long as
you're not really getting stung per se?
No, I mean, you're getting the benefit now and paying for it later.
Okay.
Yeah.
So in the rears.
In arrears. So, but if you decide to pay the full amount, the $1,800 every month, then you wouldn't probably have to catch up any.
Yeah, but I don't want to do that.
Okay, see?
Yeah,
so it's just like people that withhold their exactly.
Like, why would I do
so
interest-free loan?
Now there are some things that we've talked about before, like the HSA.
Yes. Yes.
I like that even personally because.
Explain that. How does that work? The HSA.
So an HSA works with a high deductible insurance plan, right. And you can contribute up to $3,500 for a single, or
65.
Well, for single, this is for also for 2019 because that's where you're going to be dealing with $3,500 for a single person or $7,000 for a family.
Okay, so I need to set this up in 2019, get an HSA account, and start funding money out of my company.
Yes.
Into this as a benefit.
Yeah, and your company can deduct that
up to $7,000.
Yes,
for my family. Okay, I need to get that ball rolling, and I could use that for anything. Even there's other loopholes with that as well, right? They
just have to be medical. And so
and you
like
can borrow against it or something. No?
I'm sure that you can.
Okay. Cool. I need to do that. I need to get on the
It's
HSA
good,
plan.
especially for those people that don't have enough medical expenses that they itemize.
Well, you can keep rolling this over, $7,000 every year.
Exactly.
For 10 years,
Oh, and that's the
you're gonna
other
have
thing.
70.
It's not like an FSA where you have to use it every year. It just rolls over. So,
and then you can eventually pull it out.
so yeah, it's like a way for you to deduct your medical expenses without itemizing. Like I did my LASIK. So I deducted my LASIK on my tax return, essentially.
Cool. And you use HSA to do it. Mm-hmm. So you beefed that up, funded it,
Yeah.
saved a year or two,
Wrote it off on my taxes.
and then used the money out of the HSA account because you was pre-tax dollars.
Yeah.
So your HSA account is before taxed. So you pull that money out of your profit, put it in the account, and the government says, okay, you can do 7. So it's like a Roth IRA, kind of.
And you don't get taxed when you pull it out if it's for medical.
Cool.
And
if
you know,
you-
that's pretty broad too.
Yeah. Oh, marijuana? I'll just tease it. All right, cool. That's awesome. All right, man. This has been a great time. I was actually kind of prepared. I texted you before you got
I
here.
was prepared.
You had like several notes and a Thunder phone. And you got LASIK surgery. I just found out about that
2 years ago.
2 years ago. I can't get it. I actually saved up 4 Gs. How much was yours?
About 4. Mm-hmm.
I saved up, and this is a long time ago, like 10 years ago. And I went in there. They did a scan, and they're like, "We can't do you." I was like, "Mama." She's like, "You have a condition in your eye called keratoconus. We guarantee 20/20, and if we do the LASIK on you, now this is a long time ago, 10 or 15 years ago, maybe longer. We can't do you because we guarantee it." And your eyes are unstable, and it may come back. It may not completely correct it. I was sad.
They said I got about 12 years out of it.
Man, I'm excited. I think technology has changed. I think you can help. I think there's a way to help my eyesight. I can't really see out of my left eye at all. I wear 2 contacts. Fun fact.
That is a fun fact.
And Bob Stoops has the same thing.
Interesting.
So, and with the same doctor. But we're not making the same money. Probably doesn't the same count either. Anyways, in another arena, $1,020,000. What did he make? Like $6 million. Anyway, so that's it. Big plans for 2019. Let's get more of Rose, so more people would hire you and more about you. What's your goals for 2019?
Confession. I had a goal for 2018. It didn't happen.
What was it?
Buy a rental house.
Damn right. I forgot. Are you going to make that? You know, mine was the marathon. So I'm glad that we're confessing. That bothered me. I fell off somewhere. I kind of got not motivated. And then I gained a bunch of weight this year. I actually gained about 30 pounds. I was a vegan, doing phenomenal. Now I'm a fat boy again, but that's okay. But I made it very 100% full blown, burning in my heart. I'm going to run a marathon this year, full one marathon. Are you going to buy a house this year?
Yes, maybe even 2.
Double up.
I mean,
what help do you need? I have an article for you I can give you.
Analysis paralysis.
Just buy the damn thing.
I know.
I got clients that bought 4 houses in 4 months.
Yeah.
I mean, I'm forcing the guy that's turning his own house into a rental. Once you just do that, you live in a great house. I know you love your house and you put a lot of money in that landscaping in the front. But why can't you convert that, move into a little bit bigger, put your eBay store in its own room, make a 4-bed?
I did meet my goal of the eBay business. We broke 100.
Good. I know you're out like in Las Vegas. Were you getting
Yeah.
awards?
No, we were just going for a convention.
Okay. So you got your eBay business. You hit that goal.
Mm-hmm.
All right. What are you going to continue to do eBay?
Yeah. I mean, I don't see
It's
why
fun.
not.
I really have exercised Facebook Marketplace.
Yeah.
I am trying to be a minimalist, and if I don't need it, I'm just selling it.
I like to buy on Facebook Marketplace sometimes.
And I mean, you'd be surprised. I put a cracked Amazon Fire Kindle HD, and my daughter dropped it, and it was $100. I mean, just to repair it would be $50. I'm like, this is dumb. And I'm selling it for $15 on there, and people are blowing me up. Like, can I come get it right now? And I was like, So I just started selling everything. Everything. Like I used to donate a bunch of stuff, and I still do. I mean, if this is my new rule, I'll put it on there for about a week or 2, and if I don't, I donate it.
Yeah.
And so I have to get special forms because I'm way over the 500. And should I? I mean, am I on the edge there?
Well, I mean,
I already have a gang of deductions.
yeah.
And trying to float through, a broken Kindle
Yeah,
for $100.
It probably won't benefit you.
Okay. Anyway, time is money anyway. All right. So 2 houses, 2019.
Yeah.
Can I help you? This is what I do all day. Just email me the deal.
I know.
And just buy one and fail. Or move out. And you got an automatic rental.
I know. I could do that. I could do that too.
Because I'm looking at my homie's financials and he's like, you need help. And I'm like, you're single? I'm like, dude, you're getting taken to the rack. You've got to do something. You can't even start a business. Mm-hmm. Do an eBay business. Do Mary Kay. Do Evacare.
Yeah.
Your cell phone is after tax dollars. Your gasoline is after tax. What's wrong with you? And some people just don't think about it. And I hope that someone that just listened to that, I know that we got into personal goals here. I'm sorry. But, use the tax code for a reason. Don't abuse it. Pay your taxes. But there's so many things that a lot of people don't know, like start a business and write off your cell phone. I'm paying $200 a year. A month. Mm-hmm. You could be saving that. You can make
in your home office. There's just
there's so many variables,
and it's just one of those things that people weren't taught this as growing
you
up, or it's not like they go over it in high school.
Well, this is how to save money on your taxes. They don't even tell you what taxes are.
No,
we're just so suppressed as people.
It's shocking to me when I meet people and they just either they don't care or they don't know and their eyes just gloss over, and then that's my cue to like, okay.
Well, there's a friend and he doesn't listen to my podcast. This is a guy that he's hanging out with, and he would go to H&R Block, and it broke my heart. I'm like, you're an entrepreneur, you are a graphic designer making a killing money, and you go to H&R Block. Do you really think that there's a $10 an hour employee behind the screen that tells them, that
probably just learned taxes the month before.
Yeah, are they have your best interests at mind? And that's why I love working with you. Is you have my best interests in mind. I need to get to you sooner than later. And I think the biggest fear was I don't want you to say no. And I know the basics and I know about my cars and stuff, but I did not know about Section 179, and I will be utilizing that soon. Anyway, last final words, my dear.
No.
Nope.
Boring.
Set big goals. So we're going to hold Rose to it next year when I bring her back on, or hopefully sooner before that. You're going to have 2 houses. Say it.
2 houses.
I'm going to have 2 rentals.
I'm going to have 2 rentals.
And I'm doing it for my daughter.
Yes,
who's
for Scarlett.
Beautiful, for Scarlett. And for my hussie, who just is hanging out, having a good time, being my hus. See? And he can help you. He's handy. Mm-hmm. He can help you, and you guys need to do together. All right. Thanks for coming in. Have a great day.
Bye.
Thanks for listening to the Savvy Radio Show. Glide online and listen to our other motivating episodes at savvyradioshow.com. Connect on Twitter at LandlordBook, and always be buying assets.